I want to thank everybody for taking the time during dinner time tonight to join our first time homebuyer seminar. My name is Michael Ferraro. I'm the president of Mortgage Markets CUSO. Mortgage Markets CUSO is the exclusive first mortgage provider of your credit union, the Waterbury Teachers Federal Credit Union. Tonight, we're going to have an interactive discussion about, as I mentioned a couple minutes ago, one of the really most exciting things you can do, and that's buying your first home. I have a panel of experts here that are going to talk through the process. And before we start, one house cleaning item, there is a chat. At any time you have a question, just type the question in the chat and we'll make sure we answer it for you before we go. Okay? All right. So that's me. Nice picture, huh? All right. Let's start with some introductions. Elaine Orsini is the Vice President of Lending and Risk Management for Mortgage Markets CUSO, and she oversees our underwriting area. Cindy Berger. Cindy is one of our loan originators. She's been with Mortgage Markets CUSO for about 5 years. David Golis. David is a closing attorney that is exclusive to Mortgage Markets CUSO and Waterbury. We've been partnered with him for a long time. Patrick Scheel. Patrick Scheel is the current loan originator for the credit union. You would be working with him exclusively when shopping for your first home. And I'm really honored to have Val and Robert here. Val Artario and Robert Perelio, two nice Irish names from the Waterbury area. They are the exclusive realtors with Century 21 All Points Realty. So if you find your home and you're interested in going shopping for it, we want to connect you with them after this call because they'll be able to help you. Okay. So where do we begin, everyone, right? You're out there, you're in the marketplace, you're just thinking about, right, looking for your first house, and you don't really know where to begin. And Cindy, a lot of people call you, right? And they kind of talk to you and say, okay, where do I begin in the process and how does it work? You want to talk a little bit about that, kind of the beginning steps?
Yeah, sure. Hi, everyone. Thanks for joining us. Yeah, buying a house, it's a huge deal. It's going to be probably the biggest purchase of your life at this point. And there's a lot of different options and things to go over. Our job as your loan originator is to help walk you through the different options and programs that might be available to you and see what would best suit your needs. This all starts with just a simple conversation. Call me, call Patrick. We'll kind of walk you through the process and the next steps.
So talk a little bit about this on the product, Cindy. What's best for a first-time home buyer a lot of times from a product perspective, because there's a lot of things out there, right? I get calls all the time. Should I look at a conventional mortgage? Is it maybe get into an FHA mortgage or maybe an ARM? Could you talk a little bit about that?
Yeah, so there's a lot of different products and programs. I mean, the conventional loan is probably the standard loan. It's probably the most popular loan right now. We're kind of in what they call a seller's market. So the sellers have lots and lots of offers coming in, lots of options. The conventional loan seems to be the quickest to process. It seems to be the strongest offer in some cases. And there's a little bit of a myth with the conventional loans. A lot of people think, oh, if I go with a conventional loan, I have to have 20% down. That's not true. We have great first-time home buyer products for conventional loans with as little as 3% down. So, that's one of the nice features of a conventional loan as a first-time home buyer. You can get into that with a small down payment.
Patrick, I think it's important for me, as I mentioned to Cindy, it's not a one glove fits all, right? For a first-time home buyer, there's just a lot of different options. They could get to conventional, they could get into an ARM. And that's one of the things that we do and we, championing ourselves on, right? As partnered with Waterbury, making sure we put the first-time home buyer in the right product specific to them. Is that fair?
Yeah, definitely. I know a lot of people think that maybe their credit isn't the best or they don't have a ton of money saved up, so it's not a good time for them to purchase, but there's so many different products out there that we might be able to find one for them.
Talking about a lot of products, and this is really true. When I got my first home, I got an ARM, right? So it was called a 7-in-1 ARM. And Cindy, can you talk a little bit about that and what the benefits are for it? Because, you know, when I got it, I put 3% down, I remember, and I had a low payment for the first 7 years, and then I refinanced, and it really worked out to my benefit.
Yeah, the ARM is actually a big product right now in this market. It's an adjustable rate mortgage. So in your case where you did a 7/6 ARM,
Yep.
the first 7 years, your interest rate was actually fixed. You knew what your payment was going to be every month for the first 7 years. After the fixed period, the 6 comes in, and the 6 is when the adjustment comes. So it could adjust every 6 months thereafter. So, you know, you just have to be aware of that. Most people that take the adjustable rate mortgages know they're going to refinance within that time frame, within the
Right.
first 7 years of the product. And it allows you actually to maybe qualify for more of a house than you could afford upfront. You could buy a little bit bigger of a house because the interest rate's going to be typically a lot lower for the first 7 years of the product.
Robert and Val, when you're shopping with your consumers today, are they talking a lot about ARMs or first-time home buyers? Is it a popular product today with the rates being as, you know, where they are?
Yeah, I think what's important is they have options, right? Because
right.
everybody's situation is different. Some people are really attracted to the ARM, and others prefer a conventional or want to hear about the FHA. So I think it's great, like you said, Cindy, to really share all their options, kind of listen to their goals, and then try to help them with a good fit from there based on their timelines and things.
It's a great
Absolutely.
segue too. It's perfect, Cindy, because options, right? Conventional, we talk about that. And then we talk about the ARM. We get a lot of calls on that. One of the most popular options too, obviously, is FHA and our relationship with CHFA. Could you talk a little bit about that too?
Yeah, so the government loans, the FHA, the VA, USDA, the CHFA loan, as we call it, the CHFA loan's the Connecticut loan that will actually help you with your down payment as a first-time home buyer. It's a great
Okay.
program. If you qualify for that, you can get some assistance with the down payment. FHA in of itself is a great program. If, you know, not everybody has perfect credit. You know, we've all had
Right.
mistakes on credit in the past, and with an FHA loan, you know, they're a little bit more forgiving with credit, and maybe your debt versus your income, your ratios are a little bit on the high side. They're very forgiving. So, you know, we'll go over all the options with you to make sure that, you know, you have a good understanding of what all your products are that you would qualify for.
And the
I think-
FHA, just so I'm going to interject you
Yeah.
a little bit. The FHA also goes up much higher on, or less of a down payment. They go up to 96.5% LTV, loan to value, which also helps with first time home buyers. And they, so it's a great program to utilize if you're in that position.
Yep, absolutely.
So we have a question. Can I get a loan through the credit union for a home in another state? The answer is yes. It depends on the state. We are licensed in, I believe, 9 states currently. So depending on the state, you can get another home. So I hope that answered the question. Okay. Just continue here. Okay. Okay, so again, let's kind of step back, reiterating. Having that consultation with Cindy, with Patrick, or Robert and Val initially, right? And you're talking with your realtor partner, and then they push you back to Patrick and Cindy is critical. They're going to sit down with you. They're going to look at your specific scenario, as Robert said, and customize the right product for you. That's what we're here to help you to do. Once we customize the right product for you, talk through your, you know, current situation, we're going to qualify you for your mortgage. And Patrick's going to talk a little bit about how that process works, right, Patrick?
Hello, everyone. Yeah, so obviously the biggest factor that goes into qualifying you is your credit score. So as I kind of alluded to earlier, so you know, anything 780 or higher is considered top tier, but it doesn't necessarily mean that that's where your credit needs to be in order to get approved. I mean, FHA will go as low as 580. Conventional, we could get you approved at 620. And the bottom portion just kind of shows the different tiers. But where your credit stands is going to determine, you know, not only the product I could get you approved for, but your interest rate, your cost, So I always suggest just kind of pulling your credit on your own. It never affects your credit when you pull it yourself. Getting a sense of, I have a lot of people that after I pull their credit, well, that's not on there, that's not mine, so you just want to make sure that all the information is accurate. See what you could potentially clean up in terms of collections or delinquencies or anything like that before you really start the process.
Okay, good point. Okay. So different factors, right? I think a lot of people, at least when I get calls, guys, they think it's just about pulling credit, right? And seeing if I qualify for a mortgage. But as we all know, it's a little more in depth than that, right, Patrick? And there's different types of things you have to look at to make sure that their income, as an example, to qualify for the mortgage.
Yeah, exactly. So there's a few different things we look at. Obviously, credit score, credit history, income, expenses to come up with your debt to income ratio. And then just making sure that you have enough in assets to cover the down payment and closing costs.
Is there a standard debt to income ratio, Cindy, in the marketplace on a first time home buyer? And is there a top line that usually is too high, would you say?
It depends. For conventional, typically 43, 45%. With FHA, I see sometimes approvals around 50%. It really depends on the borrower. Everything's individual and unique.
Okay. Oh. Okay. Fun times.
So most people start the conversation, when I start the consultation, they just want to know how much can I get approved for?
Right.
So this is just basically what we look at. So we look at your debt to income ratio, how affordable is the payment to you? As Cindy mentioned, so typically on a conventional, we don't like to see more than 45% of your gross monthly income going towards your bills. And then FHA will actually go up to 57%, depending on exactly where your credit score is. But that's just how we calculate the ratio. We take all of your debts, including the mortgage payment. We take your gross monthly income to come up with this ratio.
So two things I hear a lot for transparency on the call. Student loans. Do we include student loans in the debt to income ratio? And if they're in repayment and I haven't made a payment yet on them, right? In today's kind of worldly environment, how do you calculate that, Patrick, into the debt to income?
Yeah, so that's actually a hot topic right now because a lot of people are being promised that their debts are going to be forgiven. But if there are deferred student loans showing on your credit, typically we would take half of 1% of the balance to come up with a payment.
Okay. And Elaine, another question I get a lot of times is child support. Either someone who pays child support or receives child support. How does that, kind of factor into debt to income?
Yeah, so that does factor into your what Patrick was just describing as part of your liabilities. So we would have to count that into your liabilities. And if you're receiving alimony or child support, we have to prove the continuance of that. So we would need a divorce decree to show that or some sort of court document showing that it's going to be 3 years or more, and then we can count that as your in your income.
Got it. Okay. And then if you're paying it, you have to let, Patrick or Cindy know that you're paying child support too, right? On the other side of that.
Yes. Yep. That'll go into your liabilities.
Okay.
And the tricky thing with receiving child support, so not only would we need like a court document showing how much they're expected to pay, but we also need to see it going into the account. So a lot of times, if you have a cash agreement where they just give me cash or, well, they missed a couple weeks, so they just gave me a month worth of child support in cash, and it doesn't really line up. It's harder to verify that way. So if they are expected to give you child support, I would make sure they give you a check, have it automatically come out of their account or something.
That's a good point. And again, I can't reiterate it enough. On this call, we might be going fast and there might be a lot of information, but having that conversation with Cindy and Patrick, after this or in a couple of weeks, we can kind of take you step by step through the process, right? Again, let's start from the beginning. We sit down with you, have a consultation. Then we want to get you qualified, right? We want to look at your debt to income, look at your credit, look at your overall history. And then we want to get you pre-qualified, right, Patrick? After you do that, And these are some of the things that you might require, for lack of a better word, when getting someone pre-qualified.
Yeah, so just taking it a step further
Yeah.
and going through the pre-approval process, we just need to verify what you're telling us you make, how much you tell us you have in the bank account, things of that nature. We just need to verify that with documentation, and this is just kind of a breakdown of some of the things we might need.
You know, I hear a lot, Elaine, from people that they get money under the table, they can't document it, right? I mean, we hear this all the time. People nowadays, a lot of people have side jobs, they're on the web, they're doing things. How do you, everything has to be documented. Is that accurate?
Yeah,
Can you talk a little
unfortunately,
bit about that?
cash, yeah, unfortunately, cash under the table or even cash hidden in the mattress doesn't really go
No,
well
no, 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 no.
with the agencies. So my advice to you is if you're going to be looking for a home, start depositing that money into your account. We only need to see 2 months, some more these days, it's only 1 month of seasoned funds, and start getting on the books with your employer. We do need to see a history of employment too. So I don't want to mislead anybody in saying if you're on there for a month, we could do it. But, you know, you have, in most cases, they want to see a 2-year history of employment. And then the last year is being verified. So just a heads up.
Here's another question, Cindy, I get a lot from first-time home buyers. So people are in sales and their bonuses change every year, right? It's not one bonus every year. It's a different bonus. How do you calculate what income to use from that bonus?
Yeah, so we usually take a 2-year average of the last 2 years and average it out. So
And average it
we can't
out.
we can't basically use overtime or commission or bonuses unless you've been consistently receiving it for at least 2 years. That's the standard rule.
Okay. One of the most, listen, people, Robert and Val will call all the time, right? And we talk to them. And we get their members and the consumer pre-qualified. And then they say, well, can we get them pre-approved from pre-qualification? Patrick, talk to me about the difference from getting someone pre-qualified to pre-approved.
Yeah, I kind of mentioned it earlier. So
Yeah,
it's just
yeah.
basically verifying all of the information. And that's a lot of the first question that any realtor asks. Well, are they pre-approved? Did you collect documentation? Did you verify everything? So you just want to take it that next step, send everything to either Cindy or myself to get that pre-approval.
Robert and Val, talk a little bit about that. Why is that so critical? Because I think it's a really important point to stress, because we get a lot of calls and a lot of consumers call, right? Saying, I need a letter now pretty quickly, even though I have a pre-qualification letter, not to be redundant to Patrick's point, I need the pre-approval. Explain to the audience why that is really just so critical from your standpoint.
I think there's 2 reasons. One, probably in this market more than ever, with the inventory so low and things being so volatile, things are not on the market long at all. They're moving very fast, and a lot of times they're even in multi-offer situations. And if you don't have that pre-approval ready, a seller is not even going to respond to an offer or even look at an offer that doesn't have a good solid pre-approval. So that's one. But here's a really important one that a lot of buyers, we stress this a lot with our first time buyers or any buyer really.
Yeah.
Not all pre-approvals are equal. If you have a good, solid, reputable bank like yours, local, that carries more weight. There are so many online banks nowadays. There's thousands of them. And these people spit out pre-approvals very fast without doing their due diligence.
Yeah.
And the seller gets into contract with them and the deal blows up because they didn't look at the numbers correctly, right? So our sellers, it's something we do on the sell side, is we'll explain, hey, we've never worked with this lender, or this is a local lender. It's always a seller's decision, but I can tell you a lot of sellers, if things are close, will always defer to that reputable local lender on a pre-approval.
Great point. Great point. There's a couple questions. Will getting a new job hurt our chances of getting qualified approved, Elaine? How would you answer that?
So my answer to that question is if you're moving from one position from one company or one organization to another organization in the same field, and you're bettering yourself, it's, you know, it's a better paying position.
Yep.
Or even if it's lateral, but in the same position and you've been in the combination of the two or 2 years, that's not a problem at all, as long as there isn't a gap in employment. Another thing is if you're coming out of college, we can use transcripts, and we'll use 6 months of your current position to qualify you with as far as employment is concerned. So no, not necessarily moving from one job to another does not hurt your chances of getting qualified. It just, you know, we need to make sure that it makes sense and that there isn't really a large gap of employment in between.
The next question is, do you have any information on the time to own loan through CHFA? And then do you have any specific realtors that you work with? Well, I can answer the second question first. Robert and Val are the exclusive partners of Mortgage Markets CUSO and Waterbury Teachers. So we exclusively work with them in the area. Yes, there are other realtors and realtor groups. Of course, we work with many, but for Waterbury, we work with Robert and Val. And Patrick, if I'm not mistaken, there's only certain lenders, right, through CHFA for the time to own, and it's a very limited in scope.
Yeah, unfortunately, we're not a participating lender in the time to own. So we could do the CHFA with the down payment assistance. We just can't do the time to own.
Okay. And one more from Jessica. Do you have a good budget sheet to track finances and see what we can afford? Well, Cindy, good news on that coming soon, right? We're going to have, we're going to
have a whole program.
Coming soon, we're going to be having our own customized app so you can track your credit, track your budget, and you can see what you can afford. That's coming within the next couple months. I would say before we get there, right, Patrick, the best thing for that is have a conversation with yourself, review your credit with Jessica, and kind of put her on the path, right, to see what we can afford before we roll out actually something tangible that they can have.
Yeah, I agree.
Yeah. So coming soon, Jessica, but for now, we'll connect you with Patrick and he can help you. So, okay. All right. Good questions. Okay. Oh. All right. So we're not going to go through all this, Patrick, but is there anything specifically on here you want to talk through? I know one thing that I'll mention before you even start. And the number one thing, I'm a first-time home buyer. I'm excited. I'm getting my house, right? I worked with Robert and Val. I found the house of my dreams. And then I went and took out a personal loan right after I got pre-qualified. No. Right. Could you talk a little bit about that?
Yeah, I think first and
Yeah.
foremost, it's important just to communicate any changes, whether it be I'm thinking about changing jobs, what does that do to my approval? Or my car broke down, I need a new car. I'm going to need a new car loan.
Yeah.
What does that do to my approval?
Yeah.
So we certainly don't want any surprises. So we don't want to give you a pre-approval that, you know, we just pulled your credit last month and now you're looking for an updated letter. And then when we go to pull credit again, there's these new loans showing up. So this just kind of gives a breakdown of certain things that you shouldn't do. Don't run up credit cards, don't take out new loans.
Right.
Avoid job changes, things of that nature to just, you know, the way that you submitted the application initially, hopefully it is the way that your application should be once you're under contract.
Yeah.
Elaine, you want to elaborate on that? Because I know we get that quite a bit, right? People just sometimes don't get it or they don't understand.
Right.
Buying the
right.
first house that, oh, I just took out a credit card, you know, I mean, that shouldn't affect me.
And,
And
there's
that's
checks
not-
and balances too with that and the back end, Elaine, right? With
Yeah,
the-
so I was just about to mention that we are required to pull a credit report 10 days prior to closing to see if any additional debt has been incurred. So keep that in mind when you're going through the process. You're not scot-free until the title changes hands and you got the keys, and then you can go out and buy the furniture you want. But actually, in all sense, you really should just keep it good. Don't go crazy. Let's not get house poor here. But, and the other thing is we always verify employment 5 days prior to closing to make sure you're employed.
So as
So-
Patrick said, the best advice I could give anybody is when you submit the application, keep it the same exact way until you close. If you're going to do anything, do it after you close your mortgage, because a change of circumstance could affect you in a negative way. So.
And there's one thing on there, if you don't mind just going
No,
back.
yeah,
a
sure,
second.
yeah.
So pay off any collection accounts.
Mm.
Now, most people would think just paying off collection accounts, that's a good thing, right? Cleaning up the credit, but if
Yeah.
it's stopped reporting, it's showing as a collection, but it stopped reporting 4 or 5 years ago. Well, it's not affecting your credit as much as if you were to pay it off, then it kind of report it and I can't think of the word, but it starts reporting all over again, and that's gonna initially drop your score down.
Yeah,
Okay.
and with collections, the agencies are a little bit more forgiving with medical collections, that they don't really require them to be paid off. So good advice is talk with your loan officer before you do anything, because you could use that towards down payment or towards your closing costs
Right.
instead of paying that money down.
Good points, guys.
And just to piggyback on that, just be very careful with co-signing for loans. When you co-sign for a loan, that goes against your debt to income ratio. So you're saying basically, if they don't pay, I'll pay this car loan. So be careful with co-signing.
So we're recording this and we're going to email this to everyone. And I know Waterbury will have this on the website. I think there's one thing that I'd like to bring to the attention on this, and anybody can bring anything up, but PMI, private mortgage insurance. And a lot of first-time home buyers are sometimes confused on what that is, Cindy, and how it could affect them. Could you talk a little bit about PMI and why it's included on a loan? Yeah.
Yeah, so the private mortgage insurance, basically protects the lender should you walk away from the property. So if you're putting less than 20% down, there's a little bit of a risk involved if you walk away from the property. So the PMI insurance will kick in. On a conventional loan, it's nice because the PMI, once you own 20% of the property, will basically drop off, and that might save you $100 to $200 a month off of your mortgage payment. With the government loans, with the FHA loans, the mortgage insurance typically will stay on until you either refinance or pay off the loan. That's one of the biggest differences too between the FHA and the conventional loans.
Good point. So again, to reiterate, less than 20% PMI kicks in,
Mhm.
correct? The majority of the time. More than 20%, it doesn't. Right? Okay. Patrick, what closing costs? Here's another thing we hear a lot, right? First time home buyers, they didn't account, they're Michael Farrell's buying a house. I'm putting down $10,000, but wait, there's more. I need to account for closing costs too, right? On the back end of the mortgage.
Yeah, and it's significant too. So if you have 10,000 to work with, and that basically only covers your down payment, I mean, closing costs, depending on taxes, insurance, all of that might be another $10,000. So it's significant. And
Can you break it down? What's included in the closing costs a lot of times?
Yeah, so I mean, everybody gets paid when you buy a house. So there's attorney fees, there's appraisal fees, title insurance, our origination fee. There's a fee to record the mortgage. Plus you have to pay for the first year of homeowners insurance prior to closing. We have to set up that initial escrow deposit for the property taxes. So there's a lot that goes into it.
Yeah, okay. Elaine, any elaboration on that or?
No, I think David's better to answer that than me, but you just got to make sure that you're having conversations throughout it. And the loan, we disclosed to you in the beginning, the loan estimate of what you will, have to bring to closing. And then when we're ready to send the file to the attorney's office, to David's office, then a closing disclosure goes out to give you kind of like more final figures that we've worked with the attorney.
Yeah.
And again,
Oh,
go ahead.
I was just going to say, sometimes, you can ask the sellers for a credit towards closing costs. Sometimes in this market up front, it's not a great way to go in with an offer, but sometimes, after you do your home inspection, you might want to ask for a closing cost credit at that time. I see a lot of my buyers are, inflating the offer amount, asking for a credit towards closing costs back up front. So sometimes that can work out as long as the appraisal comes in high enough.
You may have mentioned this, but again, right, for everyone, I'm trying to think of things that we get calls a lot, right, from first time home buyers that they ask. So I'm buying my first home, right? And I'm saying I'm putting Patrick's right example, $10,000 down, but then the closing costs are $7,000. So the total that I need to close is 17,000. Elaine, you're verifying that, right? You may have mentioned that's in my bank. If I have 16,000, that's not good enough, right? You talk a little bit about that process and the verification of that.
Yeah, so I mean, we always verify any assets that are going to be utilized in the transaction, either by bank statements or your asset statements. If they're gifts, we require a letter signed that it is a gift and not repayable. It has to be from someone who is close to you. Usually a family member will give a gift, or if you're getting a gift of equity, we have to count that. So all that's verified.
Yeah.
And prior to closing, so you would have to have that money available and liquid for the closing.
Good point. All right. Robert and Val, a lot of times, and I'll segue to you guys on this. You're our most important partner in this entire kind of transaction, right? Because Cindy and Patrick do a tremendous job of talking to many first-time home buyers, and then they pivot, right, and send them to you. But then the marketplace today, it's somewhat challenging too. So thanks for being on. First of all, why should they use you? Why should they contact you? Why not do it on their own and save some money, right? Candidly.
Sure. No, good question. I'll say it again. I think this market is one of the more challenging ones a lot of professionals in the industry have seen. So I would argue it's more important now than ever. A big part of what we do in the beginning is spend a lot of time sitting down, learning about the goals and the timelines, right? And using that as a starting point.
Yeah.
From there, what I think is important is really future pacing, especially first-time buyers, of what to expect. Because a lot of times they're just going in wide-eyed and really not sure, where to go or what to expect. That way, when problems do come up, because we all know inevitably they will, right? They're not taken off guard, and they understand it's part of the process. And for us, we use a team approach. I learned early on that me trying to do everything at once was leaving some things on the table. Only one person can do so much. So Val's in the field doing a lot of showing of properties, and I'm working the phones on the marketing end, and also searching for off-market properties, which is really big right now because the inventory.
Talk to me about that, Robert. I want to ask you, so for the, many people on the call are in the Waterbury area, obviously with Waterbury and I know you guys are both, from that area, so you know it very well. What is the marketplace in that area for first-time home buyers today?
In Waterbury, you're saying?
Yeah, specifically in the Valley kind of area. Yeah.
So just to give you an example, so in Waterbury right now, there's 52 homes for sale, single family in the whole town, right?
Okay.
Just to put that into perspective, normally there's 280 or so, give or take.
Wow.
So, this is pre-COVID. So, Val will sit down with the buyer and start to talk about what neighborhoods they like, what they're looking for in a home. And because there's not a lot out there, how many choices might they have, Val?
Just a couple, if that. And then it takes, maybe a week or two to go by, and something else will slowly pop up.
Right, to meet their criteria. So a big part of what Val will do on the initial consultation is find some of their target neighborhoods, and then we'll actually call the neighborhood and see who's thinking about selling, to see who's not on the market right now. We'll also send out mailers, just passively crossing our fingers and hoping that something comes on the market is not a very effective strategy right now.
So I want to piggyback on that, but I have a question. I want to get to Elaine on the question. So Elaine, can someone have money for closing and down payment in two separate accounts?
Absolutely. Yep. You could have multiple asset accounts that we will utilize.
You just have to verify the assets.
Correct.
Okay. So Robert, in the great kind of setup here, in the marketplace, are you finding yourself with first-time home buyers today then more being consultative for the future because kind of the state of the inventory? Is that what I hear you saying? It's more talking about future needs and preparing them because it's so tight right now?
Yeah, I mean, look at it this way. If you've never bought a home and you go and you see a home you like, it's very hard for a first-time home buyer to say, yep, I'm going to go ahead and put an offer in on this home today, right? That's a lot. And the reality is that's the decision they have to make because the market's so fast-paced moving. So
Yeah.
by us spending some time in the beginning and
Yeah.
really talking about what they're looking for, what to expect, when they have, if they choose to make a decision fast to keep up with the market, they're more comfortable doing that because we've already gone over the statistics, what they're comfortable with spending, what their budget is, what type of
Yep.
home they're looking for, and some of the good options out there.
Another question, I want to make sure I get to all of them. So the question is, as of today, what is the interest rate? And here, this is an interesting question. If my interest or assets are outside of the USA, can people utilize them, right? And verify them? And they said they need some clarification on that. So Patrick, on the interest rate, we have a standard rate, but a lot of times that can vary, right? Because someone could roll in fees and different things into the rate. But you have a base rate that you go by. Is that fair?
Yeah, so right now our base rate on a 30-year fix, which is the most popular option, is 6.625.
Okay.
But yeah, to your point, you could potentially increase that. There could be, I mentioned it earlier, where your credit score isn't as good or you're not putting down as much, that could affect your interest rate as well.
Or on the flip side, you can buy down the rate, right?
Right. Yep. So you could buy up to 2 points, and that typically drops your 1 point would drop your interest rate 0.25%.
So the question, Maria, is there's a lot of, different ways you can kind of slice and dice it. The base rate 6.625, as Patrick said, but you can buy it down lower, or it can go up to depending on how much money you want to put into the transaction. And Elaine, can someone use funds that if they're, let's say, in Canada, and verify those funds?
Okay, so we would have to obviously verify the funds, do the dollar
Exchange rate. Yeah.
exchange. Thank you. Dollar exchange. And they would actually have to liquidate it and put it into an American account prior to closing.
Great point. Okay, good. All right, Robert and Val. So, what are some of the other top things? We don't want to go through all these things, but, I would say in the marketplace, are there any misconceptions, right, to utilizing you guys, meaning, hey, I could do it myself and don't have to use a realtor. I get your point, and I actually agree with you. Now more than ever, because of the marketplace, we want to use one. By looking at these, are there any things you really want to highlight, to the kind of people out there?
Yeah, I mean, I think the big one is it's important to have someone negotiating on your behalf. If you're just going to call the listing agent, you have to remember their fiduciary responsibilities to the seller. So, any conversation you have with them is going to be angled towards the seller. And if you have someone fighting for you in this market, it could be, getting you a good negotiation on the price, or a lot of times it could be helping you win the bid versus the 5-6 other offers that are out there. So having someone working on your behalf, I think is critical right now.
How about besides the Waterbury area, the surrounding towns? I know you gave some great stats on Waterbury, which is kind of shocking, to be honest with you, right? So is that in the valley in our area?
It's
all
worse.
over?
It's worse. But because Waterbury is a big city, you actually 50 is like that's a good. So Watertown is in the high teens. Middlebury's single digits. Woodbury's teens. Southbury's in the 20s. So these are all towns that Middlebury's low. Middlebury maybe has 60 homes usually. So for them to have 9 is still low. But a town like Southbury has 20. Normally they have 180. I mean, it's. The town of Rocky Hill, Connecticut had 1 home for sale a couple weeks ago. So it's
Did it really?
If
Really?
you look,
One home.
you look town to town, it's pretty amazing.
Wow, that's shocking. Patrick, what else, with realtors? I know you develop close relationships with them, right? When you get your members pre-qualified and pre-approved. And, Robert made a good point. They're fighting on the behalf of the consumer. Are you finding a lot of your members or first-time home buyers are getting outbid currently today? Is that happening?
Yeah, unfortunately, that's still a thing. I have people offering 20,000 over asking and still not getting the property, so it's tough out there.
Well, we don't want to be negative about it. We're trying to give the reality, right, Robert, of how that is and how we can kind of help them in the future. But yeah, please jump in on that.
And it's important just because we're on both sides, right?
Yeah.
I see the listing side too. It's not always price, like, not to, talk
Yeah.
about this too much. But using a reputable bank, it can really help you stand out right now. If a lot of offers are coming in with a couple $1,000s, a seller would much rather lean to, a clean offer with reasonable contingencies and a reputable lender versus,
Yeah.
6 or 7 contingencies in a, lender they've never heard of.
So then I'll ask you this question, guys. So I'm a first-time home buyer from Waterbury. Worked with Patrick, got pre-qualified. Go to you find a house, right? There's different offers. And those offers are conventional. And the one that Patrick and you are working is FHA. I think you see where I'm going with this?
Good
Yeah.
question. Yeah, really good
Yeah.
question.
So do the sellers gravitate to more conventional buyers than FHA?
100%. Because again, there's less contingencies to worry about. A conventional appraisal has less check marks than an FHA one, which has more, in a seller's mind, more things to worry about. More things can go wrong. And I really think communication is the key. I mean, Val, you might want to speak to this. A lot of our buyers, they change. Maybe they're looking at a multi or a single, and then they'll change the route they want to finance based on how many offers. So Val, what have you done in these scenarios with the lender?
So just making sure to communicate that, and we're always making sure with their, our buyer, making sure they understand all the moving pieces, and then that we're in constant communication with everyone, that's on their team, trying to help them put in a winning bid.
Yeah.
Yeah, and I find too on my end, more so than ever in my career, that I'm talking to more of the listing agents than I ever have. They'll call me and we're looking at your offer. We want to know this, and this, and it's great. It helps to maybe give them the deal if I've reviewed everything. They want to know what our policies are. They want to know if we underwrite in-house. They want to know a little bit about mortgage markets. So we do that all day long.
Okay.
Awesome.
Val and Robert, thank you. Appreciate it. That's great insight. And Dave, with the closing process, I have to tell you, this past week, we had someone out, right, internally, and we were all kind of working together collaboratively on the closing process, and people are excited, right, and nervous at the same time when they're closing their loan. What are some of the top things that you work with consumers on, helping them through that nervous yet very exciting kind of process?
Sure. Yes, I would go back to that closing cost little discussion, because obviously the borrower is concerned about what they're going to have to bring to the table. So you're letting Cindy and Patrick do an awesome job of ahead of time kind of hitting the estimate so that it's pretty close. So yeah, there are other things, and this is what I like to do as a partner with Mortgage Markets QSO, is when I get the file and the closing disclosure, I can see what town it's in. I can call your borrower and say, okay, it's in Bolton. I know that Bolton has a different real estate tax structure than, let's say, Manchester. So you might have to bring more to the closing. I ask them, does it have propane? Does it have oil? All these things are not on the original disclosure because it's dependent on the property. So those might be things that might, a few $100s here, oil, it adds up. You might have to bring a couple of $1,000s. So I typically like to grab that file right away, call the borrower, find out the information, and then I can use the estimate and add mine in and get it to about 99%, probably 30 days before you're even closing. So they understand that they might have more money to bring. And to say that when we talk closing, Patrick said 10,000, and that might scare some people, but your Mortgage Markets QSO's fees and closing costs are below what I've seen out there, with other lenders, let's say. So you can be assured that you're getting a good deal with QSO.
Talk, the escrows come up a lot, right? Dave, again, to get to that. Is that usually a stress pain point for people at closing, escrows and the understanding and the confusion of that, and maybe why it's so different from the original kind of discussion in the beginning?
Sure, it could be because you
Yeah.
kind of have two different ones. So when you buy a house, let's say you bought a house today, it's May. With the seller, if it's in whatever town in Connecticut, your taxes are typically paid in July and January, and they're paid forward. So the seller has already paid some taxes, and let's say in January. So if you close today, you would owe them some money back. So there's tax payment. But then also with Mortgage Markets QSO, they want to make sure come July that there's money in the escrow account to pay taxes for July going forward. So a lot of questions I get is, why do we have taxes for Mortgage Markets QSO and I paid the seller back? So we're able to explain that. And it could be in same thing with insurance, but you're not paying a seller back for insurance, but the escrow account could be fairly large depending on the time of month you close and the town. So like Bolton only pays their taxes in July. So if you close today, you would pretty much probably need about 14 months of taxes that are in the Mortgage Markets QSO escrow account. So that could be, you're not getting cheated, but it's a lot of money up front. And then the following years, it would all kind of even out. So yeah, there are some, it's good to explain that to people so they know.
So another thing that I hear a lot, I don't know if you do, specifically again, first time home buyers, they don't even know what a title, right, means. They know the title to their car, right? But when it comes to the title on a house, what's that? What do you
Sure,
mean
yeah.
title search,
They both
right?
use-
Yeah.
Yeah, they both use the name title, but in Connecticut, you would get just like a car title. You're gonna have a piece of paper that's gonna transfer ownership from the seller to the buyer, and it's always recorded in the town that your house is located in. But what's important is usually when you buy a car, there's usually one loan on there, that if a person had to use that to buy the house, the towns tracks every owner, every mortgage, everything that's ever happened up into the point that you buy it. So a title search is done to make sure that your title is clear, that there's no intervening liens. And when we talk about, qualifying for mortgages and stuff, I'll see on a title search, people who have not paid their credit cards, their companies have brought a case against them, and there could be what's called judgment liens on the property. So part of our job as an attorney is to make sure that from the beginning of time until the day that you buy it, there's nothing intervening in there that would affect your ownership of it, old mortgages, liens. So, and that's that kind of segues into title insurance, where there's also an insurance policy that's purchased that can protect anything that's happened in the past. Because even though, I'd like to think I'm perfect, but mistakes are made in titles and things pop up because the town clerk didn't do the right thing. They missed a recording or something was off. You want to make sure that your title is good. So it's kind of extra protection. We make sure you have clear title, but then you also will most likely have a policy it's called the owner title policy that will protect you for as long as you own that house.
So the 3-day review period, right? We get this a lot too. So buying a house, the closing disclosure must be, right, delivered to the consumer within 3 business days prior to signing the documents. Is that so they can review it and change their mind, David, within that time? Talk a little bit about why it has to be a 3-day review period.
Well, even though, it's about 26 years I've been doing this, prior to this 3-day rule, people would go to, not Mortgage Markets QSO, because you wouldn't do this. They would go to lenders, they would get qualified, they would get assigned an attorney like myself.
Yep.
And they would have sort of a general estimate of what they were supposed to bring that the mortgage broker or loan officer gave them. Then I would call them on the phone and say, by the way, here's all your closing costs. And they would most definitely be all higher than what was ever promised to them. So the government came up with a new rule that says we need to first disclose an initial right away when your loan officers are involved and they sign on and everything is ready to go. They get an estimate early on, so they know what that looks like. And then most definitely prior to the closing, 3 days before, but with Mortgage Markets QSO, it's typically more than a week. We do that with your
Yep.
underwriters and loan processors, so that all those numbers look almost exactly what they look like when you had your loan estimate. And if they do change by a certain amount, some things cannot change, and some things change you might have to have a redisclosure so that there's no surprises, there's no one's taking advantage of anyone. And typically, they're right on, there's literally your estimate to what they are the day of the closing is either right on the number or maybe a slight, it could be even less sometimes.
So, great point. I want to get to this question. Patrick, is it possible taxes can be included in the mortgage? And if so, can that be done with FHA?
Yeah, and I think that's kind of where some of the confusion lies. So we're gonna set up that initial escrow deposit to make sure that we have enough to make the next tax payment. But then going forward, typically the taxes are part of your payment, which kind of confuses some people. Well, why do I have to come up with all this money up front if it's part of my payment? But yes, it can be, it typically is part of your mortgage payment. FHA
Tanya,
conventional.
Great. Tanya, the answer is yes, they can be. And with FHA and different programs, the taxes can be and would be included in your payment. So, okay. Dave, what else on the closing? I know that 3-day review period, right? And the title. Are there any other kind of best practices or hot topics that come out that you want to kind of talk to people about or mention, today?
Well, once you deal with Robert and Val, hopefully they found you a nice house. You've put an offer in. There are things in the contract that that come up. Typically right now, you don't see a lot of inspection provisions because everything is as is. Take it or leave it. This is what we're doing. So you have to be aware of that. Typically, a contract would have 14 days where you would normally, in a normal market years ago, you would have time to have a home inspector. They would pick things out. Things would be negotiated. They would be fixed. That is very uncommon now. Typically, it's how the house is. So you have to be careful of that. You also have to be careful of when we're working with Cindy and Patrick that if you are not purchasing with cash, which does happen occasionally, you're going to have a mortgage with Mortgage Markets QSO, the contingency date to make sure that you're very diligent getting all the paperwork. You don't get me the paperwork. Cindy and Patrick need all the paperwork, your tax returns, so that they can timely give you, even though they pre-approved you and they pre-qualified you, we need to get to you're clear to close. Everything is all buttoned up and ready to go. So that timeline is important because you do not want to miss the mortgage contingency date. And all of a sudden you don't have a mortgage because now you've put a large deposit down. There's a lot of large deposits out there too. It used to be $1,000, $500. Now I have 10,000. I have $50,000 deposits that buyers are putting down. You got to be diligent so you do not lose that deposit. So those are kind of before you get to me, but I'm there to answer those questions too. Someone could call and say, I signed the contract. I'd say, yeah, make sure you get things done. If you do have an inspection provision, you make sure that you negotiate and with, like I think Cindy said, a lot of times you might be able on the back end, if you find something that's wrong in the house, you could get a closing cost credit. You're not going to get a credit to repair. We just couch it in the terms of closing cost credit. So that can help you. And that does still happen.
Robert and Val, is there anything that you see, as part of the closing process, working with attorneys like Dave, that you want to bring up or mention that you find is a really critical kind of piece too?
Yeah, Dave brought up some good points there. It is very situational. There still are spots where we may be able to negotiate a little credit there. But to Dave's point, I think that's really good to know going in. There's not a lot of wiggle room there, and hitting your deadlines are important because, to Dave's point, sometimes people are putting in backup offers now that are really good, and the seller has that on the table. And if you miss that deadline for a day, now you have a decision to make. Do I put my deposit at risk or worry about the seller going to a backup offer? So, working with a bank that hits their timelines like you guys is really important from that perspective as well.
So everyone, here are the next steps. We're here to help you. We're here to have a consultation with you and help answer your questions, point you in the right direction. If you go on Waterbury's website and you go to mortgages, you can click on the link to fill out a form. When you get that, we would text you a day and a time to have a consultation with Patrick, or if Patrick's not available, Cindy, as I mentioned, to answer your questions. You can call us at that number, and you can connect with Patrick or Cindy. It'll go to their cell phone, or you could email us there as well. We're going to email you though, after this, Dave's information and Robert and Val's information as well, and all of our information. This way you can have it and you can connect with us on a one-on-one basis if there's any specific questions we can answer for you. So, in closing, is there anything from my team that you want to kind of bring up? I'll just go around. Robert and Val, any kind of closing thoughts? I know we're in a tough environment, right? And from what you said is very eye-opening as far as inventory. Do you maybe see that getting better the second half of the year and to give some of our first-time home buyers some hope?
I do. I definitely. It's been this way for a few years now, and every market has a breaking point where things start to shift.
Yeah.
Obviously I don't have a crystal ball and can say exactly when, but
Yep.
it would be hard to see this going another year or so being this low. At some point, those numbers are going to go up.
Great. Cindy, what are your closing thoughts on everything, for first-time home buyers specifically?
Yeah, it's exciting, and you guys probably have a lot of questions. Maybe some of them came out, maybe some of them you didn't want to ask here. Just give us a call, ask us. We're more than happy to help you out. It's a very exciting time, but very stressful too. Like there's a lot that goes into buying a mortgage. So know that, we're the professionals. We're going to help walk you through every step of the way.
Patrick, is there one bit of advice, closing advice you would give a first-time home buyer from your counsels to conversations that you have with them?
Yeah, I mean, a lot of times it comes up where people think that they're in a worse predicament than they actually are. And
Yeah.
you really don't know until you have that conversation with Cindy or I.
Yeah.
Just have us pull your credit, have us take your information, and you might be in a better situation than you think.
And Elaine, I know you deal with the back end, right? When the first-time home buyer is going through the process and you're underwriting it, getting all the documentation. What's the one kind of takeaway again that you could give to our first-time home buyers as they go through that process?
Yeah, I can't stress enough the fact to just work with your partners, your real estate partners, your loan officers here and your attorneys, and just stay in constant contact. They're the ones who are going to guide you through the process and really help you present to underwriting the best possible file, to help move it along quicker and get you into your new home. It's really, it's a large, I've been in this business for a very long time. It's a large financial purchase, but if you are with the right team, it could be the most rewarding experience that you have. And a new home is something beautiful to be in.
Yeah. And we'll end with Dave. Dave, if a first-time home buyer wants to check on what their escrows might be, right, in a certain town, and they have no idea, right? I'm buying a home in Watertown, as an example, and I've never bought a home before, so I don't know what the taxes would be. Where do they start to kind of look at that so they can have an idea of what the closing costs and escrows might be?
Sure, well, you could call me, because, it's important to know that I'm an attorney that has partnered with Mortgage Markets CUSO, because you have determined that I can do the work diligently and efficiently, and you've set costs that are not, they're not prohibitive. It's a good deal, and it should be said that you have partners with other attorneys throughout the state.
Sure.
Do the same. So I would say one important thing would be to call me about the taxes. You could call the tax collector in that town and ask them, what is the tax structure? And they will tell you it's 1 time a year, 2 times. There are some that are 4, but it's most important, I think, to use, you have your own choice to have a different lawyer, but you're always going to use a Mortgage Markets CUSO partner lawyer. And that law firm knows how to get your closing done fast, done and efficiently with Mortgage Markets CUSO, and you will be charged below market rates and you will not be overcharged. So it's very important, real estate agents, always have relationships with other attorneys, but if you could use one that's partnered with you, it makes it go a lot easier and faster.
That's a great way to end. That's a great way. So I just want to open it up to everybody. We've kind of bubbled up. We're right on time here, 7 o'clock Eastern. Any other questions before we end? And again, we are going to email this to you, and it will be on the Waterbury website. And there's many, many different ways, as I mentioned, to contact us. You can call us, you can email us, or you can go right on the Waterbury website and fill out that form, and it'll come right to my team too. So open it up for questions one more time. All right, everybody. Thank you very much for joining us today. For all my guests, thank you very much. I really appreciate all the insight tonight, and I hope everyone has a great night.
Thank you. Have a good night.
Thank you.
Thanks,
Bye.
everyone.
Okay,
Bye-bye.
bye-bye.